Welcome back to the ETF Inspector. It is Saturday, August 2nd, almost 3:30 in the afternoon, and this is my personal trade video. So we're not covering any yield max funds or round hill funds or anything like that. Just make a video once a week to talk about the trades that I have made in the previous week. And with it being August 2nd, it's my birthday, and it's a big one too, 40th. So I'm older and wiser now, so you guys should all listen to me. Just kidding. But let's go right into it. Actually, let's not. Hold on. First, we'll do a update on the channel. We're up to 2,650 subscribers. So made about 140 videos. Started back at the April 28th, 29th, I think. So doing well. I don't know if there's anything else worth really talking about. 2,651. I've had 40,000 views in the last month. Made $179. So this has been my first. I got monetized on July 13th, I think. So made $179. A lot of that is thanks to you guys. There have been a lot of super thanks and super chats. So if you take all those out, the revenue that has come from just the YouTube advertising alone is maybe half of that. So thank you guys. I think you guys have paid more than YouTube has. So very much appreciated. All right, so we'll start off. I've got two poor man's covered calls. If you're not familiar with that strategy, it is where you purchase a leap. That is a deep in the money call, usually long dated, so long expiration. In this case, we're talking about SoFi. Oh, did I click on the wrong one first? Look, I'm already getting all out of order. I wanted to start with Intel. Intel, right? Purchased it back on March 28th, expiring January of next year. I had to pay $8.95 a share, or $895, to purchase that $15 call. And then since then, I've been selling calls off of that. So I started selling around 25, and then Intel wasn't doing so well. So 24, 24, 23. It had some good times. So back up to 24. Now, most recently, I am selling at 22 because Intel is struggling. But it's okay, because so the reason I started out selling 25 is because a $15 strike plus basically the $9 was 24. So I didn't want to possibly sell at an amount that would, if assigned, end up breaking even or being less. So I went $1 above. Then as I was bringing money in, it was bringing down my cost average. So I was able to sell closer to the money and bring in more premium, or at least attempt to. So now we are at this point. My most recent one, I closed last week. So we already talked about this in last week's video. I should have graded out. Paid a penny to close out last week's 24 and rolled it out for basically a month, August 22nd, 22. Okay, so, and that I actually can already close out. I collected 41 cents a share, $41, and I can already close that out for 13 cents. So we will see. I'm definitely not going to go all the way till August 22nd just to collect the last handful of pennies. So once that starts getting low, I'll make another adjustment to that. But in the meantime, so if we start out, the cost was $895, and then all money brought in since then has been driving down that cost. We can ignore these numbers. So my cost is now down to $683. So that's why 683 and that 15 would combine to be like what, 2183. That's why I'm able to sell a 22 now, because I really wouldn't have been able to get very much for higher out of the money. But as long as that's the whole reason why you buy it deep in the money, because even if the stock drops, you can continue to sell calls and generate income off of it. So this one it's not doing wonderfully, but it's still okay. I'm able to earn money, and instead of having to put up 15, well, at the time, let's see, Intel was 22.67 when I started this, so I would have had to put up $2,267 to buy 100 shares to be able to sell these calls. Instead, I put up $895. So obvious savings there, and that's basically my collateral that I'm able to collect the premium from selling calls on a $22 stock while only investing $895. That's the purpose for the poor man's covered call. This was my first round of it, so obviously that's not a very expensive stock to do it on, but I didn't want to learn and cut my teeth on an expensive stock and get my butt kicked, so that's why I picked lower priced ones. Intel is currently trading at 19.31, so it's not doing well. Had a rough week for sure, but that $15 call is currently worth $5.15 if I were to sell it. So that's all there is for that one. Last week is when I sold that, expiring August 22nd. Next, I have another. There it is for SoFi. This one I had to close out this week. As you can see, I originally bought a $5 call and started selling $13 covered calls off of that, or short calls. And then I had to up it to 14, up it to 14, up it to 15. Well, unfortunately, I'll say fortunately, SoFi has just been on an absolute tear. So it ran all the way up to $21. I was not going to be able to roll this anymore. Trying to buy to close this $15 call and sell anything that was going to bring in any kind of money just wasn't happening. I was going to have to sell basically out to the end of the year just to make 10 cents or something. So I decided it went up enough and I took the win. So what that looked like is I had sold this $15 call for $1.46. I had to buy it back for $6.80. That's okay though, because I purchased the Leap, the $5 call, for $6.83, and now I was able to sell that for $1,734. Don't mind the negative. I generally keep debits on this side and credits on that side, but for the Leap poor man covers call, I wanted to start it in reverse. That's why I put a negative, even though it was on the credit, and then I just bounced it out with another negative. It's because it usually subtracts a debit, so if I put a negative, then when it subtracts a negative, it adds it. So at the end of the day, I received $1,734 closing out my long call and had to pay $1,780 and got to keep that difference there at the end. And big picture, what it resulted in was a $461 profit. Now that being said, I only put $683 up. So I put $683 in and made a profit of $461. That's a 67.55% profit, and that was across 118 days. So if we were to annualize that, I was making a 208% annual yield on that poor man's cover call. So although it went so hard against me that I couldn't roll it anymore, I mean, I could have continued selling calls all the way out till January of 2027, but the stock just went up so much, oh darn, I just cashed out and kept the money. So that wasn't the ideal strategy, but it still made money, and as long as we're making money, we're happy. Okay, that's it for poor man's covered calls. So I started with 3. I've closed 2 of them out now already, so I'm down to 1. And now I have a couple of wheel strategies. If you've watched these videos before, you know I like IONQ. This one's my favorite one to trade. I've been trading them basically all year, doing the wheel, selling puts, then getting assigned, selling calls. So most recently, I had sold um, a one that was expiring this past Friday for $41 on the previous Thursday. Unfortunately, IONQ had a rough week. Now, I like IONQ. I don't mind getting assigned it, but I didn't want to get assigned a $41 call with the stock at $38 because I was instantly going to have trouble being able to sell calls off of it. So, for that reason, and because earnings are coming up next week, I was able to generate enough premium to roll it. So I closed that 41, paying $3.26 a share, and I opened a 39 for this coming Friday for 336. So I got to roll it down $2 a share and pick up $10 total, 10 cents in between them times 100 shares. So that you generally can't make that move other than the fact that IONQ's got a high IV and they've got earnings next week. So last time on a earnings miss, they dropped from this price range all the way down to like 18 or 19. So I could be in a world of hurt next week, or not. Maybe we could get a good earnings and I'll be in good shape. But either way, as of right now, it will cost $3.15 to close that out with the stock at 38.12. Let's see if they did anything after hours that helped us any. Not really. Up a fraction, 5 cents. But as you can see, it was a rough week. I was looking like all week it was looking like I was going to be able to roll that $41 call real close to the money and bring in lots of premium, and instead I had to pay a ton and just barely get any just to try and knock my price average down a little. But we still like IONQ because of all that premium we get with the IV. Okay, open. I didn't make a trade, or I don't think maybe I did. I did right at the beginning of the week. So last week I had sold a put that was expired 2 weeks ago, expiring on this past Friday, a $2 put. I collected $42 for it. On Monday, I was able to close that out for 4 cents, so that was nice. And I went ahead and rolled it, and I chased it because open was up at the time. Have this ticker in. So yeah, on Monday, my $2 put, I got to close it for 4 cents because it was up in that 250, 260 range. And I chased it, so I sold at 250, and then it immediately bit me and ran down to $2. So I'm currently sitting with, that's not right. I must have wrote the wrong expiration date. I believe it should be 8/8. Because I sold it on Monday, and I still have it. All right, so I sold at 250 with the price at 254, collected another $41. So even if I do get assigned at 250 and the stock's only around 2, I've brought in $80 already, so I'm doing well. As of right now, it will cost 58 cents to close that put out. And this was just a fun one, advice from my little brother. All right, and then the final of my wheel strategies, TSLL. Now with them, I call it a wheel strategy, but I've never been assigned, so I just keep on selling cash secured puts and keep putting the money in the bank. So this past week, I had some $9.50 puts that were expiring on Friday that I had sold previously, and I closed both of them out on Monday for 2 cents each, so that worked out real well. Collected 25 and 21 cents on them and paid 2 cents to close them out. And then I opened up 3 more, one at 9:50 for this coming Friday and 2 at 10, but I did them at different times, so I received different premiums for them, bringing in $31, $16, and $19. TSLA is a double leveraged Tesla fund, and they closed on Friday at 10:32. So as it sits right now, close on Friday, that 950 would cost 23 cents to close out, and the 10s would cost 39 cents. I'm not going to avoid assignment. So if I get it, then I'll just start selling calls off of them. The only time I usually avoid assignment is if I'm playing it a little risky at a price range I don't like it. I wouldn't mind getting assigned Tesla or TSLL in this 9 to 10 range, especially since I've already collected $552 off of this. So if I were to say get assigned just on a 10, I really have a cost average of like $4.50. But anyway, we'll see how that goes this week. And now we've got my dividends, and even on them I do a little bit of options. So I will just kind of talk through this sheet and see how it goes. Unfortunately, it'll be a lot easier to just like log on to my account and show you all this stuff, but you know how people are. I don't know how good different people are. I don't want my account number showing on the screen or anything like that. So you get Excel spreadsheets of everything I'm doing. All right, so we'll slide over here for starters. I get 2 weekly dividend payers. I closed out a YMAG. That's why it's all grayed out for the rest of the year. YMAX, I only have 100 and some odd shares. I got a weekly distribution of $34.90 for them. And then Ulti, I've continued to increase my shares, and I currently got $83.16 distribution for this first distribution in August. And August should be a good month because I believe there are 5 Fridays, and I just keep on increasing my shares. Now we also had Group D paying this week, and I owned AMSI and Aptly. So from Aptly I received a distribution of $43.49, and AMSI I only received $3.21. The reason being for that is if you watched last week's video or 2 weeks ago's video, I decided to start generating more income by selling covered calls on all of my individual income funds. So Misty, Nefli, Aptly, AMSI, and YMAX isn't an individual, but basically everything other than Ulti. I'm not going to sell covered calls on Ulti. I want more shares. I've decided that these other funds, I like Misty, so I'm not as aggressively trying to get rid of them. But Nefli, Aptly, AMSI, and YMAX, I'm just not as excited about them. I like the protective puts that Ulti has, and I like that they have the ability to continue to swap out the stocks that they're going to trade, where Aptly is only going to trade on Apple. So with that being said, I had call sold for AMSI, and it was assigned. The person liked that 64-cent dividend that was coming, so they took my shares on Wednesday, and I collected $1,600, selling it to them for $16 a share. And I would love to find out who they are so I could send them a thank you letter, because I got to sell them my shares on Wednesday for $1,600, and they ended the day at $14.88 on Friday. So I hope that 64-cent dividend was worth the $1.12 loss that they took. But I received like a $3 and something distribution because I still had like 5 shares left. So that's why that's in yellow, because I went from 105 down to 5. So for the week, this says monthly distributions, but this was the first week of the month. I collected a total of $297.31 in just my dividend payers. And just since Friday was the first day of the new month, I just saved what I had all month last month. So just in dividends, in July, I received a total of $656.23. So far for the year, I've collected $2,871 specifically in dividends or distributions. I did try to generate a little bit more income with options surrounding these dividend payers. I sold a cash secured put on, what would that be, Wednesday for Misty for $19.50 while the stock was at $20.36, and it very quickly went against me. It's now at $17.87, so it's looking like I'm going to end up getting another 100 shares of Misty with a, call it $19.50 minus 45, a $19.05 cost average, not the end of the world. And then I sold a cash secured put on Ulti on Friday because Ulti got down right around that $6 range, so I sold a $6 put. I only got 15 cents or $15 for it, but if that gets assigned, then that's basically a cost average of $5.85 on those shares. I also just went wild buying more and more shares as the price dropped this week, so I now have 1,200. I think I had like 825 at the end of last week, if I remember correctly. Obviously, all the current prices have dropped, and it looks like everything is now below my cost basis. So I'm in the negative on everything I'm holding, but that's okay, right? So not the end of the world. You're gonna have down days. You're gonna have down weeks. So for the week, income-wise in my trading fund, I brought in $297.31 in dividends. And then as far as dividend options, that was these down here. So they're not my wheel strategy. They're not this or that. These are just generating a little extra income off these dividend payers. I brought in $58.65. For IONQ, that was the one where it went way against me, so I had to roll down $2 a share. So I was just happy to get any kind of a credit. So I brought in $8.66. On TSLL, I brought in $29, almost $30 from that roll. And then SoFi is the one that really made my week, closing out, selling my long call, my deep in the money call for $1,700, and buying back the short call for like $680, resulted in a little over $1,000 profit. So trading wise this week, I made $1,447.85. My trading account balance is $25,000 and change. So this isn't my 401k. If you hear me talk about some of the other funds, those Round Hill funds, some Pallady, LFGY, I own them in my 401k. I don't really count them because you can't touch that money forever. So this is my taxable account that I do trading with, $25,000. All right, that's pretty much it. That's the whole update on my trading for the week. If you have any questions or comments or whatever, feel free to put them in the messages below, and I will definitely get back to you. So, got a dad joke of the day for you. I can't remember if I do them on this video or not, so I just got one ready just in case. But before I do, appreciate you watching, all the likes and shares. It's funny though, because I've had a bunch of people in the live chats on the Ulti videos ask me if I show my own trades. It's like, yeah, every Saturday, here's the video. But, okay, dad joke of the day. I just realized that Bob the Builder and Jack the Ripper, they have the same middle name. Yeah, let me know when you get that one. All right, have a good rest of your weekend. Watch out for tomorrow's video. That's everyone's favorite, Ulti and LFGY, the week look ahead, where we go deep dive into line by line, all the options that are set up for the week ahead, looking at percentages on how far in or out of the money they are, and then we make our estimate on how much we think they're going to pay us when they declare on Wednesday. So that'll come out tomorrow, hopefully tomorrow morning. Other than that, have a good weekend.